Greetings once again, and welcome to this second part of a conversation with Charles Mutiso on blockchain and cryptocurrencies and their applicability. As we heard in the first interview, Charles Mutiso has a background in math and physics, and his area of research was near Earth, researching the near Earth space environment. Now he mostly writes software and is also a stock market advisor. Welcome once again, Charles, and thank you very much for joining us.
Thank you, John.
When we started, Charles, you took us through, in a really excellent and simple way of what basically what a hash is, what a nonce is, what a block is, and then what a blockchain is. And that's where we had reached. And I was wondering whether you can, take us along the journey. Everyone, blockchain is all the rage. Everyone's talking about blockchain and about Bitcoin. But you were, when we finished the last interview, you were at the start of basically explaining how cryptocurrencies use the blockchain technology as a sort of like a backbone for their immutability.
Yeah.
Please go ahead.
Okay, thank you, John. We have the key concepts. I'll just continue on from where we were of a blockchain. It's a chain of blocks, tamper-proof, immutable record of data, and any change in one of the blocks invalidates the entire chain. So what I've done is I've set up a blockchain and I have some transactions in each of the blocks. And this is now getting into Bitcoin and cryptocurrencies, because imagine in the Bitcoin world, there are people spending their Bitcoin, all those transactions are being registered somewhere, and these blocks of data are being filled with transactions.
Yes.
You have computers on the Bitcoin network which take a block and together with the nonce, the number ones,
yes,
together with the hash of the previous block, they hash that or they mine that.
Okay.
So when I press mine, my computer will actually mine this block.
Okay.
And when I find the nonce that validates this block, I would say this is now a valid or a mined block.
So the transactions that are then, okay, so the digital information contained there, from what I can read, is James pays Mary, Mary pays loans Edward, Mary pays a John. That descriptor, that data information, it comes to you with a level of certainty that is provided by the fact that the people who put it there, this has not been messed about with.
It hasn't, and that's a different area of technology.
Yes.
But yes, there's something called the consensus protocol. There are all kinds of technologies that we're not talking about today, which address the veracity or the truthfulness of the data in these transactions.
Okay.
Yeah. For the purposes of this, let's just assume that those checks have been done.
Okay.
And every computer on the network has been given this block.
Okay.
And now the work of the miners is to go and find the nonce,
okay,
which validates the block. Once the block has been validated, this block is now added to the blockchain. Okay. Right now, the Bitcoin blockchain is about 700,000 blocks long.
Okay.
So now this, we're assuming, is the latest block.
Okay.
It will now be added to the blockchain because it has been mined.
Okay.
It has been mined, it has been added to the blockchain. On average, the Bitcoin protocol or the Bitcoin software mines a new block every 10 minutes.
Right. No, it's not as often as I mean, I was even surprised. You're talking about, when you mentioned the figure 700,000 blocks,
Mhm.
is that roughly, true? Is that roughly the reality in the world right now? We're
Yeah,
only talking
it's
about 700,000 Bitcoin blocks in the world in total.
yeah, it's a bit over 700,000, maybe
Okay.
720,000, but
Okay.
every 10 minutes there's a new
New.
block added.
Okay.
Yeah. So you see, a computer has now mined this and added it to the blockchain. Within 10 minutes, this data block on the Bitcoin protocol contains, it's a maximum of 2,000 transactions. So really it's a matter of either the 2,000 transactions or the 10 minutes. If they're 2,000 transactions, the block gets filled, the data block gets filled, and the miners start mining.
Okay.
Okay, so I'll press mine, and we have we've taken the hash from the previous block. Sorry, this 006C, we've put it in here. We have a list of transactions. We've mined where we've gotten the new nonce.
Nonce.
The hash of all of that has given us a hash 00DEA, which is valid.
Okay.
This block now gets added to the blockchain.
Chain. 1 second.
Mhm.
What is the relationship of the data,
Mhm.
of the digital data? We have two blocks.
Mhm.
They're related to each other. They're part of a chain.
They're part of a chain, but this data is in Bitcoin, it's all the Bitcoin transactions that are happening in the world.
All right. Okay.
Any any Bitcoin transaction in the world, whether it's in Kenya or the USA or wherever,
okay,
gets registered
okay,
and time-stamped. This is obviously sample data, but there's a lot more information here. You'd have a timestamp,
okay,
you'd have an account address, you'd have who the
okay,
payer is, who the sender is.
okay.
And part of the mining is not just finding the nonce.
Yes.
Part of the mining is actually verifying. When it says James
James.
pays Mary 4 Bitcoin, it
Yes.
actually does the math. It's a ledger.
Okay.
It subtracts, well, first of all, it checks, does James have 4 Bitcoin?
Okay.
Okay.
All right.
Then it's, think an accounting ledger. It subtracts 4 Bitcoin from James' account, adds 4 Bitcoin to Mary's account. Yeah. So I've simplified it. So it's not just finding the nonce. There's a lot of transaction verification.
Yeah.
The same thing a bank does. You write a check, they check the balances, they move the money around. So these in the Bitcoin world are Bitcoin transactions.
So if I was living my life basically using Bitcoin, I just ask, sorry, this may be a sort of left field kind of question. Why do I need a bank? This seems a lot more secure. I mean, if this information, okay, this is of course simplified for me. But if it comes with a timestamp, if it is essentially you're talking about it's not even a global ledger. It's a sort of it's a celestial ledger.
It is, John, but I'll get to that.
Okay, all right.
I'll get to that when we get to Bitcoin.
Okay.
Okay.
Go ahead.
Let me mine the third block. I think now we're all familiar with these concepts: the nonce, the data, the mining or finding the nonce. 65881, which validates the block. Just going back again, I always have to repeat this: the tamper-proof, immutable nature of blockchains. If I change anything here, let's say I want to get sneaky, and let's say I'm Ojwang. Ojwang wants to change a transaction. Instead of 1.5, he makes this 1.6. Immediately invalidates this block, invalidates the entire block.
Okay.
If I try and add any data, anything as small as a full stop, invalidate this block, invalidate the entire block.
Okay.
So that's where the tamper-proof immutable comes in. I can tamper with it, yes. I can tamper with it, but it's immediately detectable.
Okay.
That is blockchain. And now let's move to Bitcoin,
Yeah.
because this is again where the intersection of blockchain and Bitcoin come together. I said at the beginning, blockchain and Bitcoin are two separate technologies, but Bitcoin is built on blockchain.
Okay.
Let me just offer a definition and some key concepts about Bitcoin, then we'll go back to the demonstration. The creator of Bitcoin is this person or entity called Satoshi Nakamoto.
Yeah.
Nobody knows about him. He or they developed Bitcoin. They wrote a paper. They wrote the first software, and then they disappeared. Okay. So up to today, the general public doesn't know whether this is a male, a female, a group. We don't know.
Okay.
The main concepts that Satoshi Nakamoto wanted to promote is this idea of a decentralized, distributed, anonymous digital currency.
Yeah.
Decentralized, distributed, anonymous digital currency. By decentralized, we mean there's no central financial authority. You asked about why do I need a bank?
Yeah.
You don't.
No.
In Satoshi Nakamoto's world, his worldview was that currency should be decentralized, should be distributed, should be anonymous, and private, in the sense that if I want to send you money, it can be anonymous, and there should be no central financial authority.
Okay.
So it's a completely different paradigm shift from everything we know, because we've been brought up in a world with central financial authorities. We have central banks, we have banks, we have Safaricom or telecoms, which are at the center of every financial transaction.
All right.
Satoshi Nakamoto's worldview was we can actually live in a world which does not have any central financial authority.
Okay. Okay.
Yeah. The current details, the last time I checked, maybe a week ago, the price of one Bitcoin is $61,000.
Yep.
It's about 6.8 million Kenya shillings. The transaction volumes are pretty high, 3 to 5 million Bitcoin per day on average. Mm-hmm. We're talking 27 trillion Kenya shillings, more than, yeah. I don't know what's our budget. Our budget is about 3 trillion.
Yeah, that's right. This beats it by quite a bit. How many Bitcoins? How many Bitcoins are there?
How many Bitcoins are there in existence? I should know this. So there's a limit. The way the software runs, there's a hard limit of 21 million Bitcoins, but that will be reached in the year 2140.
All right. Okay.
But we're already up to, I think, 80% of 21 million. Yes. So I would say maybe there's 16 or 17 million Bitcoins in existence.
Okay. All right.
Yeah. But this is a very high number.
It is.
John. I mean, per day, we're talking transaction volumes of
27, 23.
This much.
Yeah.
And remember, this is happening outside of any financial authority.
Yeah.
This is money that's not being taxed. This is money that the IRS or the Kenya Revenue Authority or, nobody, the whole banking like KYC, know your customer, nothing.
Yes.
This is money that's moving outside of all financial authority.
I saw a chart the other day of the number of Bitcoin users on the continent of Africa. Mm-hmm. And I believe Kenya was number 2. Yeah. I think only Nigeria, maybe Nigeria and South Africa. Number 2 or number 3, Kenya was up there. Yeah. And the beauty again about the data vis-a-vis Bitcoin is that they had it down to the 42,325,026 down to the. So you're sure that even that 6 is correct at that moment when that data was collected. It's just from the way you've described the underlying technology. This is all happening outside our central financial authorities, the central banks, the revenue
Yes.
authorities,
Yes.
and the traditional banks, or
Yes.
does clearly at some point somebody has to. Maybe you're going to come into this later. If I'm holding 1,000 shillings here, I'm going to have to transition into Bitcoin. So there's a bank is still involved in some way in that I have to withdraw that money, or how does it work?
As long as you already have the money,
Okay.
there are what are called cryptocurrency exchanges.
All right.
Where you send them your money.
Yep.
They're anonymous. So again, they operate in this world of this cryptographic world where they will not, or they should not, reveal your details.
Okay.
But once the money makes it into the Bitcoin world, from there, there's no central authority.
Okay. All right.
No central authority. So, if whatever the fraction of money moving in the Bitcoin world is today, or let's say in Kenya, it may be small, but you can rest assured that KRA, it's a major headache to KRA because it's just going to get more and more. That share will get larger as time goes on.
Okay.
Yeah.
And literally the only limitation is electricity and your computer processor.
So that's different. That's mining.
Okay.
Let me talk a bit about mining.
Okay.
In the Bitcoin protocol, this process that we did mining, when we find the nonce,
yeah,
this is the only way new Bitcoins are added to the network. Bitcoins cannot be created out of thin air like we do fiat currencies. The US Federal Reserve, they want to add $1 million into circulation. They print $1 million. Bitcoin, the only time new Bitcoins are added into circulation is when you mine. If I mine a Bitcoin, my reward, I get paid by the software. My reward is 6.25 Bitcoin.
Okay.
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 So that's a lot of money. That's almost $360,000.
Dollars. That's right.
That's a lot of money. It's 40 million Kenya shillings.
Yes.
One block.
Yes.
Okay. Every 10 minutes.
Okay. So can I take it the majority of people who are dealing in Bitcoins are dealing in fractions of it?
Yes, they're what are called Satoshis.
Yes.
A Satoshi, I think, is 1/1,000,000th.
Okay.
Of a Bitcoin. But think about that, John. To this process of mining one block, and blocks are being mined every 10 minutes, I get 6.25 Bitcoin.
Yes.
Or almost 40 million Kenya shillings.
Yes.
Is up for grabs every 10 minutes. So this has forced a situation now where, as we said earlier or in the previous interview, you now have farms or acres of computers,
it's mining.
Or pools of computers trying to be the first to mine a block, because only the first person gets the reward. Once the block is mined, you move on to the next one and hope you win.
Correct.
And for people who want to get into Bitcoin or cryptocurrency mining right now, it's almost too expensive. It doesn't make sense.
Yeah.
Because the big players, what you now have are pools. Some of them in China, 2 or 3 in China, one major one in Russia. And they literally have acres of computers. And one, they have to be located where there's subsidized power.
Okay.
The electricity costs alone would cripple you.
Okay.
If you were not using subsidized power, the electricity costs alone will make it infeasible to mine Bitcoin.
Okay.
So either places where there's renewable energy, like in Iceland, I think they use a lot of geothermal. In China, where they have state subsidies. Because for the average Joe, for you and me, trying to get into Bitcoin mining right now, it doesn't make sense.
It makes sense.
It doesn't make sense.
I get you.
Yeah.
I get you.
Actually, that's the next slide. So how can I get involved? You can download the Bitcoin software. the Bitcoin software is free and open source. When Satoshi Nakamoto invented it, he meant this to be free and open source, so anyone can download the Bitcoin software. Anyone can mine if you wanted to, but like I said, it's not economically feasible right now. You can join a pool. Some of the largest miners right now do this in a pool where you get paid in proportion to your investment.
Okay.
So I can join a pool, and put in $1. And if they get a Bitcoin, if that $1 is 1/1,000th, if my investment is 1/1,000th of the capital in the pool, I get paid 1/1,000th of the reward.
Okay.
This is possibly the most accessible way for most people to become a miner. You join a pool.
Okay.
You can buy Bitcoin.
Okay.
If I have $60,000 and I want to buy a Bitcoin, buy a Bitcoin. There's obviously investment risk. You have to understand that the Bitcoin as an investment or any cryptocurrency is extremely volatile. You have to understand the something about the dynamics and the risk. And it's a risky investment. Let me just say it's a risky investment.
Volatile.
It's volatile, but if you understand the risks, and I know there's some Kenyans who have bought into Bitcoin, if that's what you want to do, go for it. But I have to issue a disclaimer and say I'm not giving any investment advice. This is all educational. If you want to invest, do your homework, find a good investor, a good advisor, because this is definitely not an encouragement for anybody to invest in Bitcoin.
Bitcoin. Okay,
Yeah.
I hear you.
You can tap into the ecosystem. So there are exchanges, there are wallets, there are other things that come in the Bitcoin ecosystem, which you can join or tap into, not necessarily just mining or buying. You can use blockchain technology to develop new products. So there are a lot of things that, a lot of technologies or products that can run on blockchain, and not necessarily Bitcoin or any cryptocurrency.
Can you give me an example?
Yeah. We talked about the will earlier on.
Yeah.
The hash functions, all of these cryptographic functions are installed on every computer. If you're running Windows or Linux or a Mac, all of these cryptographic hash functions come installed. So you can hash your own documents. You can hash like your own will or important documents that you want to secure or communicate to other people. You can do this all in the privacy of your own home. You can, some of the areas where this is pervasive and we may not know it is in communication, in email or when browsing the web, when you do like HTTPS, we're told HTTPS is more secure than HTTP. Well, the reason is because HTTPS has a layer of technology, a cryptographic layer, which prevents data from being tampered with in the time that it leaves the server and comes to your browser. So the things we talked about earlier, the tamper-proofness is actually a layer of technology built into our browsers and built into popular messaging apps like WhatsApp. WhatsApp boasts about end-to-end encryption. It's using, okay, maybe not blockchain, but it's using the underlying cryptographic hash functions to provide secure communication. For blockchain specifically, some ideas that come to mind are something like the lands registry in Kenya. Anyone who has to buy or sell land knows what a nightmare that is. You read in the news all the time about, fake titles or a piece of land being sold to 3 or 4 different investors. You hear about a piece of land with 4 titles, all of them seem valid. It's because that's the land registry is still an analog registry dealing with, human files, they're the actual literal files with pieces of paper. If you were to put the land registry on the blockchain, it would immediately eliminate 99% of the fraud. because you would have a tamper-proof, immutable record of transactions.
Okay.
It would be trivial to prove the identity of the buyer, trivial to prove the identity of the seller, and trivial to verify the veracity of the transaction history of any piece of land.
Yes.
If it was placed on the blockchain. Think about things like insurance. There's a lot of fraud in the insurance industry.
Yes.
You can begin to put contracts, insurance contracts and payments on the blockchain, where any attempt to forge or to alter contracts or manipulate some of these insurance contracts would be, again, cut down 99%, because on the blockchain, you have tamper-proof, immutable records of data, records of transaction.
Great.
So those are some technologies that come to mind for blockchain. There are others. I mean, again, John, any digital set of data, there are companies now doing their whole like supply chain on the blockchain.
On the blockchain, yeah.
Yeah. From the farmers, if it's an apple,
yes.
If you wanted to know what's the source of this apple,
yes,
there are companies that are doing their whole supply chain from the farm. When was this grown? What pesticides were used? Who picked it? How long was it in storage? How long was it transferred? You can put, because all of this is just digital data, you can put all of this on the blockchain and identify or verify with a degree of certainty the data, the digital data behind a product.
Correct.
Yeah. But I think for just average people, the most important applications, which again, we don't really see or think about, is secure communication.
Yeah.
Cryptographic functions help a lot in secure communication.
I not thought of that, and that's something which blockchain can be deployed for very easily.
Yes. Yeah.
Okay.
Well, it's already in use.
Okay.
It's already in use.
Okay.
Yeah. Some interesting facts. Let me just, as I start winding up, some interesting facts. The mining reward is 6.25 Bitcoin per block. We talked about that, where for every miner that mines a block, they get paid 6.25, or roughly $360,000, or about 40 million Kenya shillings.
Yeah.
There's a new block every 10 minutes. About over 700,000 blocks, approximately 2,000 transactions per block. So that's, every block here would have approximately 2,000 transactions. Then 2,000 more. Yeah.
Okay.
Then
So
2,000 more.
I mean, these are how many? We have three transactions in each block.
Here we have 3, yeah, and 3 blocks.
But the average is 2,000.
The average is 2,000.
Okay.
And remember, in the mining process, it's not just finding the nonce; it's verifying.
Exactly. Those 2,000 transactions.
Yes.
Complete with the dates, the timestamps, and everything.
Yes.
So I can see why such mining that requires such huge computing power. That's a huge.
Okay, this is not the hard part. This is the hard part, finding the nonce. There. So actually, let me just talk about the Bitcoin software. So here we chose, remember our arbitrary condition for a valid block was starting with 4 zeros?
Yes.
In Bitcoin, I think this is something like 8 or 10 zeros. It adjusts it automatically adjusts itself based on how many computers are present on the network.
Okay.
But it's a much more difficult puzzle to solve, so to speak. For the purposes of this software, if I used the same condition as the Bitcoin software, my computer would take days. It would take days before it mined a single block.
Okay, understood.
Yeah. The limit is 21 million Bitcoin, which will be reached in 2140.
40?
Yeah. So what happens is this creation of Bitcoin halves itself every few months, I think. So when the Bitcoin software started, it was 50, your reward was 50 Bitcoin per block.
Okay.
Then it halved itself to 25, then 12.5, and now we're at 6.25.
Okay.
So it's not every few months, it's like every 200,000 blocks.
All right. Yeah.
An interesting piece of trivia is in early 2010, when nobody knew about Bitcoin, this guy Laszlo requested, or he said, he put this in an open chat room, a forum, and he said, I'll pay anyone who delivers me 2 pizzas. I'll give them 10,000 Bitcoin.
Bitcoin.
And the offer stayed open for a few days.
Yes.
Because this was the early days of Bitcoin. Nobody knew how high it would go. Very few people had heard about Bitcoin. But somebody actually delivered the 2 pizzas, which were worth, I think, $40-something. And Laszlo gave him the 10,000 Bitcoin.
Wow.
Today, obviously, the 10,000 Bitcoin is worth a lot of money.
That's right. It's a few $1 million.
A
few $1 million.
A few million. It's not a few $1 million. It's a lot of $1 million. Let me do this math. 10,000 times 60,000. $600 million.
Okay. It's over $500 million.
Yeah.
Well, that's, I mean, the most fascinating thing about this, when I'm just standing back and looking at it, I said Kenya is one of the most intensive users of Bitcoin, investors or whatever in Bitcoin on the continent of Africa.
Mm-hmm.
But you're talking about a phenomenon here that's only 11 years old. Well, this is 12 years old. I mean, Satoshi Nakamoto was what, 2009, 2000?
Late 2009. He wrote the paper in early 2010.
Okay. So we're talking 11 years.
Yeah.
So there's something exponential that's happening here. Where do you see this going? I know it's sort of a pie in the sky kind of question. Where do you see this going? I mean, clearly people are jumping into it. It's a very volatile right now. I'm going back to the issues of privacy, of lack of a central controlling kind of agency. The fact that you don't need to go through the banks, you don't need to relate with a central bank or revenue authority. So one can see the attraction, especially in this age where around the world, confidence in governments, especially amongst young people, in politicians, in institutions, is declining. Where do you see this technology going? I mean, this, if somebody was giving out 10,000 Bitcoin for 2 pizzas just 11 years ago, and it's over $1 billion today. Where is this going? I mean, what is it going to look like just 5 years from now?
Okay, I hope I didn't paint too rosy a picture, because Bitcoin has its problems, it has its criticisms. There are technical and legal problems that need to be addressed. But if let's go back to the founder, Satoshi Nakamoto. His goal or his view, his dream was to eliminate every financial intermediary.
Okay.
Bitcoin is only legal tender in one country in the world so far. Yeah. I think it's El Salvador.
El Salvador. That's recent, actually.
It's very recent.
Yeah.
But I think with time, more and more countries, if Bitcoin, let me put it this way, if Bitcoin can address some of its technical problems, and more people find or get into Bitcoin, there will come a time when there will be a critical mass and it will explode in usage.
Okay.
The technical problems are the easiest problems to solve, John.
Okay.
The most difficult problems are, think about the world we live in today, the confluence or the nexus of political power and financial power is often wielded by the same people,
That's right.
right? And think about the power of a central bank.
Yeah.
Think about the largest financial institutions. They also wield a lot of political power.
Yeah.
And they're going to fight, they're going to fight Bitcoin and cryptocurrencies at every step, because if everyone adopted cryptocurrencies, they would be completely irrelevant.
That's right.
And think about the profits. Think about how much money the financial institutions make.
Yes, right.
Think about Safaricom, M-Pesa, M-Pesa revenue,
Yes.
billions of shillings.
Yes.
Think about, Goldman Sachs, or,
Yes.
all these financial conglomerates. They're going to fight Bitcoin and other cryptocurrencies at every step of the way. So that's why I'm saying whatever technical problems Bitcoin and cryptocurrencies have, which they do, those are the easy problems to solve.
Okay.
They're just technical problems. Once the technical problems are solved, it's more I don't know if it's a political fight or what kind of fight is needed, but I think it's just a critical mass of people. Once a critical mass of people join, or once a critical mass of countries accept cryptocurrencies as legal currency, then it's going to be a different world. Imagine a world with no financial intermediaries.
Yes. Yes. Yeah.
Is it possible? I don't know if it's possible, but it's going to be interesting.
That on that note, I'm sure that this is a conversation that we're going to be continuing, Charles, and I'm really grateful that you've been able to take us through. Is there anything that you feel that you've left out?
No, but I like I said, I want it to be balanced. There are criticisms to Bitcoin and cryptocurrencies. Let me just touch on them very quickly. One is the
Yes.
volatility.
Yes.
Decentralization is great, but it doesn't allow for rapid decision making.
Okay.
And a very key criticism of Bitcoin, especially, is the energy consumption.
Yes.
The global energy consumption needed to mine a Bitcoin, or let me say the global Bitcoin energy consumption, John, today is equivalent, actually it's greater than the energy consumption of the country of Argentina.
All right. Okay.
Argentina is a developed country.
Correct.
The Bitcoin mining alone
Consumes.
surpassed Argentina and is now equal or about to pass Sweden.
Okay.
Okay. Think about Sweden. Think about the whole country. We're not talking, Lesotho or Kenya.
No.
We're talking Sweden.
Yes, right.
The Bitcoin mining, the electricity used is greater than most countries in the world.
Okay.
So in terms of energy consumption, it's not good at all.
No.
So there are definitely some criticisms. It's not a perfect technology, but like I said, if they can solve some of these problems, it's going to open a different future.
Great. But as you said, the technical problems are probably the easier ones to fix. It's the political and regulatory ones that are going to prove more of a challenge. But it's going to be an interesting space to watch.
Yeah. Okay, and just a disclaimer, again, really quick, this is educational purposes. This should not be considered investment advice. This information is not provided as a substitute for legal investing or financial advice.
Okay, good. You've covered yourself very well. Thank you, but that has been very illuminating. And as I said, I think this is a conversation that's going to continue. I'll be very keen to have another conversation with you about Africa and the uptake of the blockchain technology in Africa. You mentioned some examples and possibilities, but also the fact that Kenya and countries like Kenya and Nigeria are so far ahead in the adoption of Bitcoin technology, and what that means, and why these two, just for us to explore those issues a little bit and see whether they can give us pointers to the future. But as I said, time flies when you're having fun, and I'm sure we'll be having another conversation soon. Charles Mutiso of Mamba Analytics, thank you very much.
Thank you for having me, John.
For this and other Elephant conversations, follow The Elephant on Facebook, Instagram, and on Twitter at The Elephant. Remember to like, share, and subscribe to The Elephant, also on our YouTube channel by clicking on the link below.